Okay, so good morning, everyone. Welcome to today's macro snapshot. For the record, we are Wednesday, June the 5th, 2024, recording this about 7 o'clock in the morning. Okay, one of the main things which we've got today, guys, is the Bank of Canada. So let's immediately have just a look at what the market's pricing in. For that, sorry, let me just go back here. If I just look at what the market is pricing in, we have that decision at 9:45 this morning. So as you guys can see here, this is the decision here. The number of cuts, it's priced in at 80%. So basically 20 basis points out of a 25 basis point cut. So the market is more or less expecting the Bank of Canada to cut. Now, why would that be? And just a couple of the issues. So if we actually look here, just at where inflation is, I mean, maybe one of the reasons is you could look at the various measures here in Canada of like the headline CPI, core CPI trimmed, core CPI median, et cetera, et cetera. And you can see here the so-called BOC tolerance band. That's the band where basically the range where the Bank of Canada wants inflation. You can see that a lot of the inflation metrics are kind of pushing down in towards that. So it's come down enough perhaps to justify that. Keep in mind that Canada, the Canadians are very highly indebted. Very high sort of ratio of household debt to earnings. The housing market is expensive. Delinquencies are rising. Unemployment is rising a little bit. So maybe there's a sense in Canada that they need to be a little more dovish than the Fed. And we just actually look at another one here. One thing which is interesting though is that if the BOC were to cut today, the difference between the Fed funds rate at the Fed, which you see here in the gray line, and the BOC policy rate, which is the orange line, would actually be 75 basis points. So 75 basis points, that's actually the most since 2019. So it's starting to be quite a big differential between the US rates and the Canadian rates if they cut today. And if they were to cut, let's say, a second time in the next meeting or two, that would be 100 basis points. And of course, that would start to have implications for the Canadian dollar. So I'm not entirely convinced myself. I mean, as I say, the market is basically saying, hey, they're going to cut, once today, and then the market is saying that, quite possibly the next hike will come as soon as September. Here you see 42 basis points priced in. So by the end of the year, about 2.5 basis points. 2.5 sort of cuts. And if we actually look at compared to the US, we can see that by the end of the year, it's 1.7 cuts. So essentially what the market is saying that the Bank of Canada in general will be a little more dovish than the Fed. We'll see. I mean, we'll see what happens at 9:45. And then at 10:30, of course, we have a press conference with Macklem. I would say, though, there's another argument to be made that maybe between now and the next sort of Bank of Canada meeting, which is on the 24th of July, which is not that far away, another 6 weeks. I was just looking at some stuff that the Bank of Canada will actually have, I think, another 2 CPI prints. I think another 2 employment numbers. They'll have, a lot more economic data. And so for me, rather than sort of being a little aggressive on the dovish side and cutting preemptively, or not preemptively, but before the Fed, perhaps it makes sense just to be, neutral today in their tone and to say they're looking for more data. I mean, and another 6 weeks, they'll have a lot more certainty that inflation is going down towards their target. But anyway, I never like to predict things. We'll see what's happening. The fact remains that the market is 80% expecting or pricing in a cut. So if we look at the chart here of USD CAD, which is here, let me just bring that up. This is a USD CAD here. And you can see here, I mean, just from a technical situation here, you see there was kind of like a triple top for the US dollar around about the 130, almost like 139 level up here. That to me, US dollar came up and then it's been going up and bull flag. That to me looks like some kind of flagging formation here. Now, if CAD, if they were to cut, I do believe that there's a possibility for the US dollar to break out towards the top side and do maybe a quadruple top test around about this level here, about 138.5 or so. I don't know that it's going to necessarily go sort of more than that, just because it seems that the Fed, may be cutting maybe once this year. It looks as though we are starting to see some slightly weakening data in the US. We shall see. Now, what happens if they do cut? I mean, as I say, it's 80% priced in. So really the degree of and the magnitude of the push upwards, we might get an initial sort of push upwards in USD CAD. But as I say, it's 80% priced in. It's really going to depend on the commentary and the tone in the press conference and the statement by Governor Macklem, just to see if they really think that they will, do what the market says and cut, 2.5 to 3 times this year, or whether it will be sort of a hawkish cut, so to speak. So it's difficult to really judge this before, and we'll have to wait and see what they say. On the other hand, if Macklem signals that the Canadian economy is weakening, that inflation is coming down to target, that they're a bit worried about the level of indebtedness and credit card delinquencies and the potential for the unemployment rate to rise. If there is that kind of commentary, for sure, I think there's the possibility that USD CAD strengthens or the CAD weakens up to that level there. We shall have to see. Okay, one thing which will be quite interesting though is to look at the cross pairs. Because definitely over in New Zealand and the Reserve Bank of Australia, we had comments from Governor Bullock, Michelle Bullock in Australia. And essentially she said that, if the data were to warrant it, they would not hesitate, quote, to hike again. I don't think that's their base case. And in fact, overnight, we had Australian GDP, which was just a little bit softer than expected. But overall, I would say that the central banks of New Zealand and Australia, so the other dollar commodity kind of currencies, are a little bit more hawkish than the Bank of Canada. So I think, if you look at something like New Zealand, a CAD here, you see that on this sort of downtrend, New Zealand CAD is breaking out a little bit. And if we were to get, a cut today and a relatively dovish commentary from Governor Macklem of Canada, I mean, maybe this wants to retest higher. There's a bunch of levels here. If you look on the left, there's like a stepping stone up here. There are quite a few different levels. So that could go higher. And then if we look at CAD versus the Aussie, which is here, we can see that the Aussie has outperformed. So that's getting to a little bit of resistance here. So again, going to be quite an interesting meeting because, as I say, against both the New Zealand dollar, the Kiwi, and the Aussie here, there could be the potential here for CAD to underperform. And especially if we see, maybe some signs of of weakness in the global economy and maybe some weakness in the US economy. We know that the Canadian dollar tends to underperform the other commodity dollars block in that scenario. So we'll keep an eye on that, and definitely I'll be looking at 10:30 to see what happens here in the press conference. And if as I say, Governor Macklem is dovish, I think, for example, against the Australian dollar, there is the potential to break out. On the other hand, if they do cut and really say that no, they're data dependent, they don't want to be overly sort of dovish. I mean, for sure, something like Aussie CAD here could actually it's a nice technical level to fall back. Also, New Zealand CAD here, it may just want to sort of come back and retest some of these levels here. We shall see. Okay, so that's for that one. In terms of other information today, we had some data yesterday out of the US, which we had, of course, the JOLTS number, which came in a little bit softer than sort of forecast. So that came in quite soft. Factory orders wasn't that weak, wasn't that strong, came in line. But what's interesting is that the market took that pretty dovishly, the data yesterday. So and that was on top of the slightly lower than expected ISM manufacturing on Monday. So far on the Monday and yesterday, Tuesday, we do have a little bit of this narrative that, the US economy is showing some cracks, weakening, et cetera, et cetera. And we saw that the bond yields came down. We saw that the US dollar sold off a little bit. And we saw, we'll get to equities in a second. So interesting, this morning we have ADP at 8:15 coming up in about an hour or so. ADP is not highly correlated to the non-farm payrolls, so it's probably best to not think too much about that. Although, having said that, it's another piece of the jigsaw puzzle. So let's see what's expected there, 175, and let's see what comes in. And I think the market's really going to be interested to see whether there's this sort of concept of, sort of a weakening economy finally, a weakening labor market finally is coming home to roost. What would be a shock to the market would be if ADP were to come in substantially stronger, let's say, I don't know, plus 200,000. And then, of course, we have the ISM services at 10 o'clock, which has got to be quite interesting. And again, keep in mind that we had the manufacturing ISMs on Monday, which was quite a lot lower than expected. So again, I think the way to be trading this or to be looking at this is to say, is this going to confirm the US economy is showing cracks narrative, or will it contradict it and say, no, not so fast? And that could be an opportunity for the bonds to maybe sort of sell off, for the yields to go up a little bit, maybe the US dollar to gather a little bit of strength. But I think so that's going to be quite interesting to be looking at that one. Just in terms of the equities, it was interesting that the equities, I'll just go on to the S&P, onto the futures here, the ES minis, on the daily chart. Listen, at this point here, there was a fib retracement down to the 50%. And the thing which we have to say, I'll put it on a 4-hour chart just to go a little bit more detail here. We had, the 50% retracement here, which was bought strongly on a dip. I know it was Friday afternoon. I know it was the end of the month, but the fact remains that was bought quite strongly on a dip, horizontal support here. And at this point, the bulls are kind of in charge. Now, it hasn't, tested this level at 53.30. It hasn't retested the highs at 53.68. Okay. But at this point, it was bought on dip, and the overall chart is bullish. There's nothing bearish about this. I mean, could this be some kind of topping formation which happens over the summer? I mean, could it be like sort of the beginning of a head and shoulders, that we have kind of a shoulder here with forming some kind of head? Maybe it goes up here a little bit and then maybe dips down, has a retest in late summer, and then finally falls as the economy falls, maybe. It's all possible. On the other hand, at this point, what we do know is that there was bought on a dip. It's above the moving averages. If we look even, let's say, like a 50-day moving average, which I can throw on, we'll throw on here. Let's say here's the 20 and the 50. I think you can see here the 50-day moving average, it's above the 50-day moving average. I mean, there's nothing particularly bearish about this chart. What I would say, though, which is interesting, is that that's the S&P, similar kind of price action in the NASDAQ, but and also the Dow doing not as well, but definitely the one which is underperforming is the Russell. And you can see here that the Russell actually has not retested any of these highs, and that this price action is definitely weaker. So what we are seeing, that the Russell also, did sort of retest its fib and was bought, but it's actually come down to retest that. So I think really the theme here is not so much that equities overall are weak, although of course it's only being held up by some of those big tech names, is that the overall breadth is weak. So the overall breadth is weak, but sorry, let me just rephrase it. The overall breadth is weak. And if we look at the RSP, which is the equal weight, you can see that also is not quite as strong. It's a little heavy, and the Russell and the small caps is a little heavy. And also, so what we're seeing here is that any economic weakness in the data is being more reflected in the sort of, the domestic US stocks in a certain sense, which is like the Russell, and maybe the equal weight, not so much in these huge global behemoths, the sort of the Apples and the Nvidias and things like that. So I think here maybe opportunities. I don't know, spread trades if that's possible, but really it could be looking to sort of sell any strength in something like the Russell and buy weakness in something like NASDAQ. That maybe that's the way to be looking at that. But again, we have the data at 8:15 and especially at 10 o'clock with the ISM services. Definitely be looking at the Russell on the ISM services. If that comes in weak, that could start to drive this narrative that the US economy, a real economy, the domestic economy, is weakening. And that wouldn't surprise me if we see the Russell and the equal weight RSP start to come under a little bit of pressure there. That's going to be kind of interesting. Now, the other thing I'm looking at, of course, is oil. Oil had continued to sell off sort of Monday, Tuesday, yesterday on the back of the OPEC plus kind of roadmap, which is interesting. So we see here that, it had a pretty strong sell-off day on Monday. Yesterday, Tuesday, sold off. Now, I've taken a small position long oil. I understand the risks there. My view is that oil here, there's some kind of measured move, which, you could say it hasn't been completed. And I'll be the first to absolutely say that, can oil push down further to these levels, 71.40, and then down to, 69.17, and maybe even do a double bottom retest at 67.80 down here. This is the WTI. Can this happen? Absolutely. And I would also point out that we had API last night, which made me a bit nervous, because we look at the API private inventory numbers, and I have to say these are not great for oil. So excuse all the exclamation marks here, someone on Twitter. But what we can see is that we were expecting a drawdown of 2 million barrels, but instead we've got a 4 million build. That is not a good look. The gasoline was also 4 million. Distillates, let's call it 2 million, and Cushing up as well. So if you look at the refined products, you're looking at about plus 6 million. plus oil 4 million, so plus 10 million. This is not a good number, and I have to say this came out after I put the trade on. So I'm a little nervous, and definitely I'll be looking at the numbers today with the DOE. So we have the official sort of the US government numbers. So if we actually want to pop that up here, I'll put it up quickly. Just look at the Bloomberg expectations here. And you can see here, again, the market is looking for a drawdown similar to the ADP of about -2. Gasoline, just a build of 1 million, and the products 1.5. So if you look at this, looking at the products is about 2.5 million plus and minus 1 million. So the Bloomberg looking for about, about plus 500,000, plus 0.5 million, whereas the API was plus about 8 million if you put everything together. So a huge divergence there. And it's just got to be interesting because the market now will be really on the lookout for, a very large build. Now, if we do get that build confirmed, I do believe that oil could push further south, push further down. And at that point, to be honest, personally, I might reconsider my trade. The one thing I would say, though, on the other hand, though, if the official numbers come in and it's a lot less of a build and it kind of negates a little bit what happened with the API, maybe there could be a little bit of a reactive bounce. That's what I'm thinking. I'm not saying that oil is going to rip all the way back to, sort of $85 or something, but my idea is that it's a little bit oversold. If you look at, let's say, like the RSIs, it had got to a pretty oversold condition. You can see here it's down to about 30. Now, it hasn't actually been down to 30 on the RSI. You have to go all the way back to the end of 2023. So it is fairly oversold on a technical level there. Now, can oil sell off a lot more? Yes, absolutely it can. But what I would also say is that if you look at some of the time spreads, I was looking at CL1 versus CL2, so the prompt contract versus the second one. I was also looking at the prompt contract versus CL6, so 6 months later. They're showing a little bit of recovery. And if you look at December 24 to December 25 spreads on the daily chart, you can see a little bit. I'm not going to say it's ripping, but you can see a little bit of stabilization. So that's all I'm trying to say. We'll see if oil stabilizes and maybe has a little bit of sort of a reactive bounce. One thing to keep an eye on also is gasoline. Gasoline, in order for crude oil to go up, gasoline will also have to join the party. And to be honest, it's looking like flat, stable, but not really positive at this point. So we'll need to see today the time spreads go up. We'll need to see gasoline having a bit of a push up. And of course, we're going to have to see what happens with the inventory numbers. And maybe even the most important thing, we have to check this narrative of whether the US economy is seemingly weakening, or actually maybe the data ADP and the ISM services comes in and shows, a certain amount of strength, or check that up. Apart from that, guys, just a couple of other things just want to look at. Interesting to look at some of the stories in emerging markets. I'm not going to look at South Africa, but we know that in India, Modi does not have an outright majority, which is what the polls had been saying. And so we saw a pretty vicious sell-off in the Indian index, the Sensex, in the result of those elections, but that's clawed its way back to about 50% or so. So that's kind of interesting, maybe a bit of a buying opportunity for those interested in like the Indian stocks here, that, at the end of the day, Modi will remain in control, maybe not with a super majority. The other thing as well, we also saw the other big election, apart from South Africa, was over in Mexico. And we saw that the Mexican peso also had a very nasty sell-off, especially with the carry trade was being unwound. But that's sort of crawling back a little bit as well, just because it looks as though there won't be such a super majority for the new president over there, Scheinbaum. And that's interesting for the carry trade. Now, just want to talk about the carry trade. It was interesting yesterday as well, just as the Mexican peso sold off, that a lot of the currencies, the funding currencies, actually, the carry trade was unwound. So we saw things like, let's say, Aussie JPY yesterday under quite a lot of pressure. We also saw, for example, Aussie Swiss franc under some pressure. I mean, there was some strength in the Swiss franc anyway. But just always interesting to note that when some of these carry trades are sort of quickly reversed, like, the classic obviously is the Mexican JPY, which had a nasty sell-off on Monday. That will have collateral effects on some of the other sort of funding currencies. So let's say something like the Swiss franc and the Japanese yen, versus against, let's say, the higher yielders like the Aussie dollar. So that's just kind of interesting to be looking at that. The other thing finally I just want to be looking at today is the precious metals, just on that sort of slightly risk-off vibe. Yesterday we saw that copper under a little bit of pressure, but definitely coming down now into some potential sort of entry zones. We see on some of the fibs, the shorter dated ones and the longer dated fibs here, we're starting to get to some congestion zones. So an interesting level there. This also could be pretty interesting here if it comes on this uptrend line at about 4.44, which also coincides with the 61.8%, one of the fibs in a 50. So that's definitely going to be quite an interesting zone there if it goes down there, especially if we see some kind of resilience in global markets and sort of the global narrative. Silver also coming down to an interesting zone. Here again, silver, I think might be more of an interesting buy. If it gets down to about 28.6, that would be more interesting. But gold to me as well looks to me as though it's kind of a sideways consolidation, maybe even a slightly bearish flagging sort of feeling about it. It just looks a little bit weak to me here. I mean, nothing to say, of course, that the bulls might not come in and buy it on this sort of shorter term fib retracement at the 38%. But I think here, this to me feels as though it's a little soft, especially with the other metals space. And maybe more down here could be an interesting buy. As you can see, it's the conjunction of a couple of fib zones for the shorter term fib in the green and the longer term fib in this kind of mauve lilac here around about the 2275 kind of level. That's something to be looking out for. Okay, guys, I might leave it there. It's getting a bit late. We have ADP at 8:15, Bank of Canada at 9:45. Then, of course, we have the oil at 10:30. We have the press conference. And before that, we have ISM services. So quite a busy morning. Let's see how it all goes. Good luck and thanks for listening.